Welcome everyone to a very simple video that goes over an integral technical analysis indicator if you are trading any market, and it's especially useful when trading cryptocurrencies. So this indicator we'll be going over is known as an inside bar, and it's certainly my favorite indicator, one that I've utilized in some of my most lucrative trades, so I figure I should share it with the crypto community. Alright, we know that the real body of a candle shows the open and the close, and the wicks represent the highs and lows in price during that candle's time frame. Now, an inside bar is a candle whose wicks and real body are fully contained within the range of the previous candle. So this green candle here is known as a mother bar, and this red candle that is fully within the range of the green candle is known as an inside bar or a harami. And harami is actually an old Japanese term for pregnant, and we can see the symbolism of this as the mother candle fully engulfs this red candle, similar to a mother having a child fully inside her belly. One thing to note is you can have multiple inside bars in a row. So here would be an example of two inside bars. And if you want to relate it to a mother, it's like a mother having twins, triplets, quadruplets, quintuplets, hex or sex, something. Anyways, I'm digressing a bit here, but just remember that an inside candle is one whose range is completely within the previous candle, and you can have multiple inside candles which represent a range that is getting tighter and tighter, which we will get to in just a second. We'll often see inside bars after a breakout or a breakdown in the price, and it happens as prices consolidate in a higher low, lower high pattern, forming an equilibrium, and it's usually in a triangular shape. So if we were to zoom into these candles here, if we were to do an intra candle time frame, what you would see is your high after the breakout, a low, lower high, higher low, lower high, higher low, and just a range that is getting tighter and tighter and tighter into this symmetrical triangle pattern. Additionally, you'll see it accompanied by declining volume a lot of the time. And a good metaphor or analogy would be comparing it to a rubber band. You can stretch and stretch and stretch and stretch a rubber band until it hits a flex point and it breaks. With these equilibrium patterns from inside bars, what happens is they get tighter and tighter and tighter, right? The volume thins out and a break, either bull or bear, is imminent, and it will happen with increased volume and volatility. So you're probably wondering how and when to utilize an inside bar in your trading, and my best advice would be to look at the 4-hour, the daily, and the weekly time frame, although it really works on any time frame. I do like to look at longer term time frames because you get a larger picture of what's going on. Longer term time frames have seen more price action, thus they show stronger technicals in the vehicle you're trading. So let's say this is a 4-hour time frame for Bitcoin. We saw a breakout and a red candle of consolidation. If our next candle starts falling down, falling down, falling, and it breaks this level right here, okay? That would be your sign to short or exit your position in Bitcoin because there will most likely be further downside. Now, Now let's say this red candle actually formed another inside bar and our next candle starts off green as an inside bar, starts creeping up, 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 and we get to this level here. This would be your sign to buy in and hold on long because there will most likely be further upside in the price. And you'll really notice if you're looking at the level 2s or just the charts live as this happens, all the algo traders, the bots, are programmed to buy when an inside bar is broken on a longer term time frame for most cryptocurrencies, and they're programmed to sell when an inside bar is broken bearish. That's why a lot of times you'll see a big flush down after an inside bar breaks bear, or you'll see a large green candle after an inside bar breaks bullish. I'll quickly show you an example of inside bars in real life on a real chart. So here's Ethereum's daily chart, and there are inside bars that you can point out all over the place. One that stands out in particular to me is this one right here. After we had multiple days of bullish action, we see an inside bar form right here, and the top of the inside bar is $1,009. So when this level broke bullish, you can see the large green candle that ensued. A lot of traders jumped in, a lot of bots bought Ethereum due to this inside bar breaking bull, and we saw some pretty solid upside after this broke bullish. And if we were to zoom into this inside bar and mother bar on an intraday time frame, let's say like a 1 hour time frame, it would be a pattern of consistent higher lows and lower highs. So it would be a pattern of the range tightening and tightening and tightening up until it broke bullish, and obviously a bunch of traders jumped in, and we saw further upside. Similarly, we see another inside bar right here. Okay, we see a hanging man candle, usually signaling that the top is in, and we saw another inside bar after that. And when this level here, 1,269, broke bearish, there was a huge flush down. A bunch of stop losses got triggered. A bunch of traders left their positions due to this inside bar breaking bearish. That was a telltale signal for them to exit their trade. And really, you can see these inside bars on any chart, any time frame, any market. Try and spot them out for yourself and utilize them in your technical analysis. I hope you learned something new today. Thank you for watching. Be prudent.